All right, good evening, everybody. It's Brandon. I want to take a look at the charts and talk about what has occurred and what is likely to occur going forward based on historical data. First, let's take a look at the futures. The Dow, S&P, and NASDAQ, everything in the Russell, everything looks okay. Up several handles. What's going on in Asia? I see the German DAX is green. Asian futures are green as well. Okay, so there's a lot of anticipation over tomorrow. Tomorrow we have the FOMC minutes, 2 p.m. Kind of a big deal. There's some stuff in the morning, ADP employment situation. That may have an effect on the market. Who knows? It doesn't really matter, but it's important to keep these things in mind. International trade. I mean, these are the things I would be watching. ADP employment. I think that is less significant compared to Friday employment situation. It's a much bigger deal. Anyway, let's get on to the charts. So the SPY, this is such a significant deal. We have 5 consecutive down days in a row. It's taken place here. What's interesting is this 125 period moving average has held. That's exactly what happened here. This was December 16th. This was the last time we had a FOMC meeting. That took place on the 17th. But the 16th, the significant deal was that it held the 125 period moving average. So we had a very, very similar structure, almost a mirror image. It amounted into I guess you could call that a V-shaped pattern. If this is a mirror image, you should probably see a V-shaped pattern. The difference here is actually it's pretty significant. The candle that took place here was an inverted hammer, and that's a reversal signaling candle. That gave me more confidence to go long. I'm going long here because of the structural similarity, the fact that the price action on this last candle held the 125 period moving average. That gives me confidence to speculate to the upside. However, the candle is not a reversal candle at all. It's very bearish. However, the market is pretty oversold, and it's expected that we should see some relief. This is the weekly frame. The weekly frame, we're testing this green dot right there. That's your volatility band. Last time we did that was right here, and basically it was here, and we got a relief rally. So these are some things to keep into consideration. I'm going to go onto a cleaner view, the old-fashioned chart, for everybody to benefit from, because you don't need to get all the technical indicators in your way. What we need to do is look at the price action and understand why these charts are they're offering a significant story. They tell a story, and all you have to do is listen to what they are telling you and let the probability work in your favor, and then you could make your money in the market. All right. So the SPY, like I said, has this bottom. You could call that, I guess, a double bottom. Basically, it's breaching this. Well, what happened here? It's like whoop, and then whoop. we don't know if it's going to play out like that, but that would be fun, right? I mean, I would say the speculation is to the upside. Um, the SPY calls, the VIX puts, something to that extent. I think that would be reasonable. So, all right. So if we zoom, let's see, I'll zoom out a little bit, just so you could see the structural significance of this chart. I think a weekly view would make more sense. Still a very, very strong bull market, but we have these fallouts. I call it a recycle. You have a recycle, you let the chart recycle and offer an excellent buying opportunity. Of course, we played the downside. We did very well in the puts this week. Yesterday, people in the chat room, we did phenomenal in several names: Tesla, Amazon, um, the SPY puts. We tried with Baidu. Um, anyway, back to the charts. I don't need to go into all that, but get on daily view. So the SPY, I would say, hey, we probably, I could make this trend line a little better. We could say something to the extent of that. I mean, this was just a complete anomaly. I mean, a total fallout in the market, a real scare that actually ended up being an incredible buying opportunity. I don't necessarily think that is going to happen, but you can't rule out these things. If there is a down wave and it's going to continue, you can't say that these levels are not going to get tested, because they very well may get tested in the future. But I'm going to use probability and say that it's likely these levels should hold. And I could put arrows here. I'll just draw on the chart. Boom, boom, boom. How many times can I say boom? But this was a crazy overshoot of a downside, a down wave, but boom, and then finally the last boom. What does that say? I would say, okay, we can buy calls. We're trying in the 202 calls, and it's risky trading into the Fed. It's probably better to wait for after the Fed, or you could front run it a little, but try with a smaller amount of risk. The idea is managing your risk, guys. Everyone should know that by now, especially the people in the chat room with me. We're really trying to define our risk, because we all know what weekly options can do if you're not careful. You could just watch your positions evaporate before your eyes if you're not smart with the risk management. So anyway, let's go into some of the names on the watch list. We'll start with Twitter, because that was the winner today. That was an awesome, very, very awesome trade. Let's see. First of all, where do we get in? It was such a great entry. I want to zoom in. It was around the 37. No, it wasn't this one. Oh, here I have. This is funny. I have the circle here because I circled the entry, but it was at 37. I can't do it on this chart. Around 37.05 or something like that. I remember we were talking about it in the chat room, and it gave an entry. It was starting to break out, and I said that it should come back to the 5-minute VWAP. Yeah, it was here. This was the entry candle. This one at 1:30 exactly. Basically, your 5-minute VWAP there was at $37.16. This breakout, came to this resistance here, failed, came back to a cluster of very significant moving averages, and then this was the entry. So that's why I had this thing circled right here, because it offered incredible leverage in the call options. We got into 38 calls and basically captured this move. The 4-bagger in the options, and sold off into the close with the rest of the market. But this looks very, very strong. I have to go on to the simple chart for everyone to understand what's going on here. But basically, this previous trend channel, you could look on a long-term view on a daily. Once it broke the trend channel, it broke out to the upside, and then kind of just failed, came back to the moving average. This was an earnings play, broke out, great, whatever. Here's the similar, the smaller version of the trend channel, but structurally similar. And today we broke above the trend line and started the breakout. This was a support that has held. I've been watching it since this fallout. I thought Twitter was going to fail and just fall into the 20s here, the low of 34.62. But really and truly, I was able to draw this trend line and recognize that we do have support. And it didn't fail, so it held on, and I've just been avoiding it, and today it finally broke out, and it offered an incredible entry. So basically, what do I see here? I see that it's probably tradable to 40. I would say 40 is a good level in the immediate term, especially if tomorrow is going to be bullish. So this simple 200 period moving average is at 42. We have a gap over here at around 47. It's a cool looking chart. It's an interesting chart because there's a lot of upside potential. We could very well fill this gap this week. Could be in the next couple weeks. There's another huge gap up here, back up in the high 60s. But yeah, it's a cool chart because, of course, here, this is where you see break of the trend line here, break of the trend line. You can, if you want to look at it from a long-term picture, you could say that, okay, this is a potential W pattern that's forming. Who knows? You can't really project so far into the future. But for a weekly options player that's just trying to capitalize on the short term, I could say that it gave an excellent breakout opportunity, and it probably can continue higher. I like to play conservatively, so I unloaded majority of my contracts, but I did recommend to my people to hold on to some. Tomorrow's never promised. We don't know how it's going to perform in the market, especially Twitter or any of the stocks. So especially on a volatility-driven day with the Fed. So anyway, here's Twitter. I like it. It's bullish. Congrats to anyone that played it with me today. Good looking chart. Okay, so let's look at Apple. Apple on the daily. Just want to zoom into this chart. Having a little issue here. Okay, so Apple on the daily view. It's interesting because today I've been talking about the 106 level in chat pretty heavily. We've been saying 104 or 105. We're trying to figure out what the right number is to go long. But some interesting things that are occurring here on the chart. Testing supports, structural supports that should hold. I believe there's another one back here. I'll just use arrows. Right there, right there, and of course, right here. So yeah, the intermediate term, we have a downtrend. We do, and it could potentially have a fallout and break below this trend channel, and then I think there's good support at 100 because there's a gap to fill right here. If I get this line out of here, there's a gap right here in this. I'll put a little box there just so we can visualize what's going on here. Got a little gap going on that needs to fill at some point in the future. But if I were to speculate, I would say Apple goes higher from here. And if it's tradable, where would it be tradable? To this upper quadrant of this descending trend line. So you can come to the assumption that 110, 112, I would say 110. It's a difficult stock to trade. I happen to love it because of the tight spreads. I prefer stocks with tight spreads and high liquidity. It makes more sense in weekly options. That's just my preference, but everyone has their own way of doing it. So, okay, that's Apple for you. Just a simple view. I like it long. Okay, so I covered Apple, Twitter, Facebook. Facebook's cool. It's kind of doing a very similar thing with testing a trend line support. Did it again today. So it's not the best setup. I would say that it's nearing support. If it breaks through, yeah, we see lower prices. But I would say probability says this thing can go higher. We'll see. Tesla. Tesla is like my favorite stock. Tesla and Netflix are my favorite stocks. Some of the hardest stocks to trade, but I love them. What do I see here? I have a lot of lines going on here, but I'll see, I'll let you guys know the big deal that's occurring here. We have a head and shoulders pattern. That's the head. That's the right shoulder. 220 is your neckline. Typically, in a head and shoulders, it's a very bearish looking pattern. When it fails, it will fail and then retest the neckline. It did. It overshot the neckline, came up to this moving average, failed, and then came back down. So now it's just kind of chopping around. I drew this. Let me get rid of this now. Okay, so I have this trend line here because it's, in my eyes, somewhat significant. Today, what occurred in Tesla is there was a gap over here, right here, there. It filled. There's a gap at 206s. It filled. It overshot the gap to the downside. The low of the day was what? 204.21, and then it popped. The market popped. I believe it's tradable to the neckline, 220. Above the neckline, it gets very interesting. If this thing can get above this cluster of moving averages here, as you see, they're pressing into each other, testing across down where the 40 crosses below the 200. It didn't occur, but if it does, it's not looking great. You can still make the case that Tesla is still in a bearish downtrend. It's still trending down, but doesn't mean that it can't pop up to this upper quadrant of this downtrend. So the 230s, something like that. I mean, my first target is going to be 220, but if it can get to these moving averages, you could say 229 or 230 is a good level. Once it gets out, it can break out. If it can break out of this trend channel, what do I see? Probably a retest of 265. This is a long-term view, guys. This is not, day trading material, but day trading material, 220. 220, and if it fails, I would say 193. But I'm speculating long. I have my members in calls and not in Tesla at the moment, but these are just, I'm going through my watch list. So Tesla is one of them. Netflix. I love the stock. Very interesting thing that's occurred on this chart. Zoom out a little bit. Draw a couple things on the chart. So basically, we have this support, this support, this support. Is this a giant bull flag? I don't know. I mean, if basically the support seems to hold, it overshoots the support, which is why if the market falls out, Netflix could, retest this level here, 317, and it could really disappoint a lot of the bulls. But again, we're in this downtrend. You could say that Netflix on a weekly is still in. Can you make the case that this is a primary uptrend? I'd say so, but it's looking quite suspect. And we're probably, in a stock like this, we're probably going to need an earnings or something to that extent to really get a clear picture of what's going on. As you can see, we have a massive gap over here in the 400s. This was an earnings disappointment, and it's just been fluttering around in this zone. But hey, all these flutters are big opportunities for the weekly options. I tend to play this stock quite often. We'll see. Where do I see this thing going? I think it could retest this descending trend line. The failure levels it was at 342.88. I defined that on StockTwits for those that like to check out my feed. I could see it getting back there again. If it fails, we could see another 10 points or so to the downside. But my speculative view is to start looking to go long here shortly. All right, so we covered Netflix, LinkedIn, another interesting situation. So we talked about this in chat. I personally didn't trade it, but some of the esteemed traders in my chat room were all over it today. Congrats to you guys, really good stuff. Another interesting situation here. We have this trendline support, tested it here, rallied hard, tested it here. Kind of just messed around. Then we had an earnings that just ripped higher and then failed, came back within the trend channel, and then here today was this isn't a candle, but let's just call it, today was the candle that retested the trend line support. Does it mean automatically go long? No, but you can say if there's a favorable situation with the FOMC and the markets want to rip higher and reverse, yeah, maybe this could be a candidate that could be tradable back into the 230s. yeah, it very well could happen this week. That's why I like these momentum stocks. Um, what else should I cover? Well, 25-minute video. Hey, guys, the idea is that tomorrow's a big day. It's very volatility driven. I would say that keeping keeping a high percentage of cash on hand is probably going to be beneficial. It's very dangerous to be going all in. I don't really need to go through risk management principles in this video, but I'm just going to let you guys know that it's tomorrow's going to be exciting. Whether up or down. My view throughout this video, you can kind of get the gist that I am leaning towards being a market bull. I've been a market bull for quite some time, and it's still a primary uptrend. So my final thoughts are, I'm not sure if I mentioned this, but Janet Yellen, last time we had FOMC, December 17th, she had mentioned that rates should likely be increased. There should be a hike in interest rates by the spring of 2015. Every FOMC meeting has been, the consensus is that rates remain unchanged. So she's already sort of forecasted into the future what's going to occur. So the likelihood of rates staying unchanged tomorrow is pretty good. And it's going to reduce a lot of fear and uncertainty from the markets. And I think there'll be more institutional players willing to, um, allocate the money and get long again, just based on the structure of the chart. There's no real structural damage to the chart. And, once the Fed has spoken, it just brings a lot of psychological comfort back into the market, which is good. This is a recycle down, and now it's time to probably revert up. So guys, that is my consensus, my thoughts, I didn't give you my agenda, but I gave you some of the prospects that are on my watch list. So I hope you enjoyed this video, and I look forward to sharing more videos in the future. Thank you.